Hi, everybody. It's Peter Schiff. It is Friday, November 23rd, 2012, otherwise known as Black Friday. Black Friday originally got its name because it's thought that retailers actually don't even make a profit. They operate in the red all the way until the Friday following Thanksgiving. That's when they finally make a profit, and I guess they earn the profits between that day and the end of the year. The cyber equivalent or online equivalent of Black Friday is Cyber Monday. I'm not really sure why people wait till Monday to get their good deals on the internet. Maybe it's because, people like to shop online when they're working, and so rather than using some of their own holiday weekend to shop on the internet, they'll wait till they get to work and they're doing it on their boss's dime, and then they'll spend their day looking for bargains on the internet. But the whole idea that this is somehow good for the economy, if you listen to the coverage on the major networks and even the financial networks of Black Friday, and you'll see this, you'll see all these people showing up. A lot of the stores were open earlier this year. They opened up on Thanksgiving evening, 8 o'clock, 10 o'clock, midnight, with all kinds of doorbuster deals designed to get Americans into the stores and shopping. And they'll show you the lines of people waiting to get in, and as they're coming out, they've got their shopping carts all full of stuff. And the idea is that this is good for the economy, that the fact that so many Americans are out there shopping is somehow going to grow the economy. The fact of the matter is, it's not the buying of stuff that grows the economy, it's the making of the stuff. Buying is the result of production. You can't consume what hasn't been produced. And so a strong economy is an economy that produces things. And if you produce a lot, well, the reward is you get to consume what you produced. The problem is, if you look closely at all those shopping carts, they're full of stuff that we didn't produce, that were made in other countries. We're importing all this stuff. And a lot of the Americans who are shopping, whether it's on Black Friday or Cyber Monday, they're putting stuff on credit cards. They're borrowing money. We would be much better off if a lot of Americans stayed home on Black Friday and saved their money instead of buying more things that they can't afford. But we're trying to perpetuate this whole phony economy, the idea that we should buy more things even though we're broke. In fact, I read this article today that early in President Obama's first term, when he met with a lot of supposedly, world-class economists, one of the bright ideas that they came up with was a plan to forgive mortgage debt, because the idea was that people were so loaded up with mortgage debt that they couldn't shop anymore. They were underwater on their mortgages, and we needed people to go out and shop. And so what we really needed to do is forgive the mortgage debt so that American families, households would have better balance sheets, and so they can go out and spend more money. In other words, because so many Americans refinanced their homes and used the money to buy stuff that they couldn't afford, and now they're too broke to keep on doing it, we should forgive all that debt so they can pile on brand new debt and go out and buy even more stuff that they can't afford. Think about how, what a stupid idea that was. But of course, if the president had done nothing, had we not had any bailouts, we would have had this type of restructuring on our own. A lot of people would have had their principal written down by the banks, or a lot of more people would have simply walked away from their mortgages, and we would have achieved that ends, but not so that Americans can go out and borrow even more money and buy more stuff. Maybe had the government stayed out, we'd have actually reformed or restructured, and Americans would start saving again instead of simply blowing their money on consumption. But, I'm sure all the people who are buying things somehow feel that they're stimulating the economy by going to a shopping mall and buying a bunch of stuff, paying for it on credit cards, running up the trade deficit. What we really need is more production and a lot less consumption, a lot less shopping. In fact, maybe we should call it Black and Blue Friday, because that's what's really happening, or shop till you drop, because unfortunately I think that's what's going to happen to the economy because of all of this shopping. It is not a sign of economic strength or vitality because we can buy things that some other country made. Where the strength really lies is in the economies that were able to produce all this stuff, that had the savings, that had the productive capacity and resources to produce all this stuff that Americans are simply, lugging home in their shopping carts. The stock market had an abbreviated session today, but the Dow was up better than 150 points. We closed back above 13,000. Of course, the stock market wasn't the only thing that was up. Gold was up better than $20. I think it closed around 1,750. Gold has been much stronger than the stock market recently. In fact, if you look at the price of the stock market in terms of gold, we're now below 7.5 ounces of gold. This is the lowest I've seen the stock market priced in gold in some time. Gold's at a 6-week high today, but I think the relationship between gold and the stock market, it's even stronger. Also today, if you look at the dollar, finally rolled over again, a big down day in the U.S. dollar index. I think we've broken the short-term uptrend. It's kind of ironic because the dollar was strengthening, the market was selling off based on the fear that we might actually go over this fiscal cliff. And now the markets seem to be rising because that fear is being diffused. It now is more obvious to people that the president and Congress are going to work out a solution, a compromise, so that we don't go over the fiscal cliff. And I think it is very ironic that everybody is worried about the fiscal cliff. They should be worried about what happens if we don't go over it, because the fiscal cliff is actually the first step in dealing with the deficits. I don't think we're doing it the right way, because the fiscal cliff goes about reducing the deficit almost entirely based on tax increases. A much better way to do it would be with spending cuts, because spending cuts are very constructive for the economy, because contrary to what the Keynesians are saying, the spending cuts lighten the burden that government places on the economy. They free up resources from the public sector to the private sector where they can be used more efficiently and more productively. So it's a twofer. When we slash government spending, not only do we shrink the deficit, but we also grow the economy. But you have so many Keynesians that believe that if we cut government spending, we hurt the economy. Now, tax hikes are negative for the economy, but the problem is deficits are even more negative than taxes. So I think if it's a choice between continuing to run deficits or raising taxes is actually better, although unfortunately Congress has a history of not taking tax hikes and applying them to deficit reduction. In many cases, they simply take the extra revenue and spend that too, and the deficit doesn't even come down. So you got the worst of both. You get higher taxes, but the big deficits perpetuate. But I think the irony, again, of the situation is that everybody was worried about what would happen if we reduce the deficit. And now we're breathing a collective sigh of relief that we're not going to go over the fiscal cliff. In other words, nothing will be done about the deficit. But what I've been saying all along, and I think now the markets might actually begin to reflect this, probably first in the currency markets and in the gold market, eventually maybe in the bond market and the stock market, but I think the market is going to start to focus on, okay, we avoided the fiscal cliff, now what? Because avoiding the fiscal cliff means we do nothing about the deficits, which means the deficits are going to get bigger and bigger and bigger, and now the markets are going to begin to worry about that. And I think if you look at the action in the foreign exchange market, you look at the dollar now rolling over, it was rallying when we thought there might be a fiscal cliff. Now the dollar is selling off on the idea that we're going to avoid the cliff. Gold was kind of restrained when we thought that we might go over the cliff. Now that more people think we'll avoid the cliff, gold is starting to break out. And so I think between now and the end of the year, we might see this play out in the foreign exchange markets and in the metals markets as the world now recognizes or comes to terms with the reality that we will do nothing about the deficits. Sure, our politicians can talk about all they want. They can talk about cutting the deficit in the future. But at the end of the day, nobody will actually do it. Because here we are, the fiscal cliff, if you remember, the fiscal cliff is the result of the fact that a year and a half ago, we kicked the can down the road on deficit reduction. We didn't do anything, but we promised to make sharp spending cuts, which of course they're not really sharp, but spending cuts and tax increases. We promised them in the future in exchange for a deal to raise the debt ceiling. Well, it's been, over a year. We've traveled down the road. Now we've caught up to the can that we kicked. and here's this can, and what are we going to do? We're getting ready to give it another big boot. But when we kick this can down the road again, we're going to try to tell our creditors, don't worry, because the next time we catch up to this can, we're definitely going to deal with it. We're never going to kick it again, even though we just kicked it. They're going to say, look, don't listen to what we do, right? Don't pay attention to what we actually do. Just listen to what we're saying. We're saying we want to deal with the deficit. Oh, yeah? Well, that's what we said the last time we kicked the can down the road. Yet here's the can, and we're getting ready to kick it again. So I don't think that the global financial markets are going to fall for that a second time. I mean, I was surprised they fell for it the first time. But would they really be that dumb? Would they really believe that American politicians are serious about dealing with the deficit when they're doing nothing about dealing with it now? Now, I know they're going to say, well, the economy is too weak. We just have to wait for the economy to be stronger, and then we'll deal with the deficit. Well, how do we know it's going to be stronger a year from now? What if it's weaker? In fact, I think until we actually do something about the deficit, the economy is never going to strengthen because it's structurally screwed up. We have all these problems that underlie the economy that the government and the Federal Reserve will not let the market address. So the economy is not going to strengthen by delaying a deal that actually shrinks the size of government. But you know what? We have to be willing to cut government and cut the deficit even if the economy is weak. And even if it means in the short run, it gets even weaker. Because we're never going to solve the problem if we keep making government bigger, making deficits bigger, because then we have a bigger problem that always requires a more painful solution. And maybe the markets will realize that. If we don't have the political will to deal with this problem now, why should we ever deal with it in the future? And you know what? Right now, we just had an election, right? It's at least 2 years before we have another one, a congressional election. It's 4 years from another presidential election. Barack Obama, this is his last term. So if we can't get a deal now, when we're so far away from the next election, because this is the furthest away from an election we're going to be, if we can't get a deal now, if we can't get politicians to actually do the right thing and reduce the deficit now, if they have to kick the can down the road now based on where we're standing, why would anybody believe that 6 months from now, a year from now, would be any different? Because by then, it'll be an even more politically charged atmosphere. We'll be closer to a round of elections, and no politician, again, is going to want to tell the truth. No one's going to say that government has to be cut, that government checks have to be reduced, that programs need to be eliminated, that maybe taxes have to be increased on the middle class. No one's going to say that. So maybe just when everybody is breathing a sigh of relief that we didn't go over the fiscal cliff and everybody was worried about the wrong thing, instead of being worried about the deficit, we were worried that we might actually reduce the deficit. Maybe finally the markets will sell off because of the deficit. And maybe it'll start in the foreign exchange markets where I think it belongs. I think the dollar could come under a lot of pressure as people realize that all it is a bunch of lip service when it comes to the deficits, that they're going to get bigger and bigger and bigger. We'll see it in the gold market. It's ironic that the gold stocks haven't really priced any of this in. The gold stocks have been very weak over the past month, even as the price of gold has been relatively strong. So again, that shows me that the people are worried about the wrong thing. They were worried about going over the fiscal cliff instead of being worried about avoiding the fiscal cliff. Because the most bullish thing for gold is to avoid that cliff. Because avoiding that cliff means the deficits perpetuate more red ink, more government spending. We do nothing about it. So maybe we'll see that between now and the end of the year. We'll see a weak dollar. We'll see a strong gold market. And then we'll see if anything happens to the bond market. Because at some point, the bond vigilantes are going to have to wake up from their hibernation and realize that all this money printing, all these deficits are not good for the bond market. Right? They are horrific for the bond market because it destroys the value of the money. And of course, that's what bonds are. They're not, and it's not just money today. It's an obligation to be paid money in the future. And of course, the future value of money will be diminished dramatically by what the government is doing in the present. Anyway, that's all for now. Hopefully everybody had a great Thanksgiving yesterday. Enjoy your weekend. And don't forget, the Peter Schiff Show, Monday through Friday, 10 a.m. to noon Eastern Time on schiffradio.com. We'll be talking about all these events in more detail on that show. So don't forget to tune in. Bye for now.